This is a student loan hack that you want to learn and teach yourself and teach all of your friends. It's super simple. I'll go through it really fast. If you have any questions, just reach out. I'll be happy to answer any questions about what I know. So let's get paying. So one of the things that we often do is try to avoid our issues. We try to avoid something we don't want to deal with. Student loans are something that people tell you it's okay, it's a good debt, you are investing in yourself and you can leave them there. Pay them for 30 years, it's just like a mortgage. I've heard everything when it comes to student loans, and I'm here to tell you, get paying, get cracking. Whatever you have that you can put towards this problem, throw money at the problem. Do not sit idly and say, oh, I don't know, it'll still be there. I'll just let it go out of my bank account every month. No, 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 no. It's not what we want to do. We want to actively pay our student loans so that you can get rid of them faster. And step by step, let me walk you through how you do that. Here we go. First things first, we want to make sure that we're documenting our billing cycle. And in order to do that, you have to call your lender. Your lender is the only one who knows what your billing cycle is, and they don't generally tell you. You can't find this information on your lender's website. So if you can, just go ahead and log into your lender's website right now. Go and look for it. You won't find it. So you need to physically pick up the phone and call them. The next thing you want to do is, once you understand what your billing cycle is, there's some key points in the billing cycle that I'll talk to you about in the next slide. And you want to make sure that you first pay your bill on time when they tell you it's due. Now, they pick arbitrarily or they work with you for the due date, whatever way you've negotiated it, all you need to do is figure out what that date is and what the billing cycle is around it. Then every time you go to pay your student loan every month, you'll pay just that minimum amount, nothing more. And then you'll go into their website and pay extra towards the lowest amount that you owe out of all of your loans. If they're consolidated or if they're separate, find what the lowest amount is and then pay towards that loan amount. And then you're going to repeat this month after month until you've paid that one loan off. The lowest amount loan first, then go to the next highest amount, and then et cetera, until you've paid all of them. So what does that look like on a month-to-month basis? Well, for me, I was paying $50, $100, $25, whatever I could to get these loans down. So I started with loan number 3. It was originally $2,400. I paid $3,351. So you can see right there, the interest is almost as much, if basically $5 less than what I borrowed. So it was pretty much doubling my cost, and I needed to pay this faster. So when you pay towards principal, that means that there's less time that you're actually accruing interest on that loan. And so when you're paying towards the principal of the lowest loan, you'll automatically pay that one off and then go into the next loan. That's the one that was $7,600. Now your lender will readjust your payments. Sometimes they'll do something tricky and they'll actually lower your monthly payment because you've paid off the loan. And that's not what you want to do because you've already budgeted for that amount. So when that happens, you want to make sure to re-up your payment to the amount it was before you paid this loan off. Then when you're paying this $7,600 loan, you are actually paying that principal quicker. You'll be spending less time paying the interest on that loan and the other loans, loan 2 and 4. Then you'll pay that loan off, move on to the next one, which for me was this one that was $10,000, et cetera, until I paid them all off. Now, of course, the interest is always going to be there at some point. Your goal is to minimize the number of months that you're paying interest by paying directly to the principal at a key moment in your billing cycle. So here's what I did. I was able to take a little over $30,000 in debt that turned quickly into $50,000 in debt and pay it off faster than my lender actually thought I would. I probably, if had only paid principal and nothing more, would have had this paid off at least 10 years ago. If I were paying principal and interest on their schedule, I probably would be paying another 5 years from now. But I was able to use my little hack and get it done faster. So whatever you can do, please just put a little bit of money aside, go into that website and pay the lowest loan today if you're in the right part of your billing cycle. So let's talk a little bit about that. Here is what your billing cycle looks like. There are a lot of different things that you may not know about your actual student loans and how they work, but this is something that is really easy to understand. You're going to take the start of your billing cycle. That is the day that they say, okay, come this day, it's a whole new month that you owe us money. Somewhere in that month, there is a bill due date. Let's say the 15th of the month. That was mine. I had from the 15th of the month until the 21st to pay my loan before the billing cycle started all over again. Now, that month would start all over again come that 21st. And when that happens, I would only be able to make a payment towards that next month payment. So, say if it was January 15th, from January 15th through January 20th, January 20th, I could go in and pay directly to the principal. Once the 21st came, any payment that I made online would be credited towards the February payment instead of the January payment getting extra towards principal. So you have to go into that little tiny window and make sure that you're actually paying down the principal at that time. Once the next billing cycle starts, you'll just wait it out until the actual due date for that month, and then you will go and do your trick again. Again, starting with the lowest amount that you owe for whatever loan is the smallest in your body of loans. I don't know how many you have. I had a lot. So everybody asked me, what if I can't pay my loans? Don't worry, you can still pay your loans. I don't know how to say this any clearer. So you can defer your loans. And a lot of people, because of our current situation, have been not paying their loans, right? Your lender will never say, don't give me something. Usually when they put you on a deferral plan or something, they want you to pay just the interest, right? So they will knock it all the way down to you and say, okay, if your loan payment automatically is $400, but of that $100 is interest, you should at least owe us $100. So that's fine and great. Defer, pay what you absolutely have to. But if you have any extra money at that point, even if you make them a $100 payment and you can't pay the total amount, your lender will still take extra money. The only problem is they will likely put it towards interest, or they will likely put it toward the payments that you missed. So you have to make sure that you're talking to them about what their deferral plan includes, how they calculate it, and if you owe anything, where does that money go? Once you get caught up and you get back on your regular payment cycle, you could go back to the hack the way it is. But don't think that just because you're deferring your loans that you don't owe them anything. You still owe them stuff and they're still totally going to collect on you. And also, by the way, there's a lot of people who can't pay their loans. You are not by yourself. So how do you make yourself feel a little more at ease? Well, first of all, there's loan forgiveness programs. They don't all work for all of us. I couldn't use them. Some of you may be able to use them. So if you are in the public service or you are a medical practitioner or a variety of other fields that have loan forgiveness, if you're a veteran, there's a ton of things that you can look into to make sure that you either don't take loans in the first place or that you get them forgiven after a certain amount of service. One of the things that people ask as well is, should I pay my loans or should I pay my debt? It all depends on your current situation. Ask your financial advisor, find a certified financial advisor. I cannot tell you what to do. However, I will tell you that I pay both at the same time. I didn't choose either one over the other because they're both important. You need to know what your payment plan is. This is also something you could ask when you're talking to your lender. Your payment plan is really important. Sometimes there's a graduated payment plan that's dependent on your interest, and that's typically the type that they want you to be in for a loan forgiveness program. If you're paying straight payments for the life of the grant or life of the debt, they will likely not allow you into a loan forgiveness program. That's what happened to me. But that plan will allow you to pay it faster over time. So you have to decide what payment plan works for you. And if you have any questions, just go to your lender. They will give you all the options for payment plans. The next thing about it, as I said, is deferring loans. Now, again, you still may be partially paying something every month, so it's not going to be that you can just put your loans off forever, but make sure that you know the current situation with your lenders, what they're required to do by the federal government, and if they in fact have to offer a deferral program, what those terms are. The other thing people ask about is consolidating. Should I or should I not consolidate? Well, the problem with consolidating is that it kind of bundles all your debts together and you can't do this targeted method of paying. So once you consolidate them together, you just make a payment towards that debt and that's it. If you can make the extra payment, it depends on your lender's billing cycle for the consolidation. So you want to make sure that before you enter the consolidation, you ask them how their billing cycle goes. If you think you could use this hack and they don't allow you to pay extra in that little window between your bill due date and the next billing period, you can also choose not to consolidate them and go about this hack over and over again until you actually pay them off. The other piece about this is, if at all possible, please avoid loans. I know I took debt that I really didn't need to because I lived in New York and I had a lot of things going on that were not related to school that I spent my school money on, including food. So if you can, live frugally, get a side job or anything like that while you are actually in school, avoiding loans altogether is the key in the first place. Now, of course, you wouldn't be here if you had done that and you're like me. So that tip is actually for everybody who comes after us, right? Teaching all of those who you mentor, your little sisters and brothers and cousins who might be coming up and going to college, teach them now about how to manage their student loan debt. It is so important for all of us to give back to the next generation who needs an education, because guaranteed their education is going to be more expensive than ours was. And lastly, just take a look at this statement and think about it. What if I had been able to invest my $100,000 in student loans rather than paying my lender? Can you imagine where my life would be right now? I might not be here talking to you, but think about it this way. An investment in student loan is an investment in yourself. And once you invest in yourself and you pay that investment off, you can then keep investing in yourself. You can open a variety of savings accounts, IRAs, Roth IRAs. You can actually make investments in the stock market. You have so many other options once you get this payment done. So it makes sense for you to pay it as quickly as possible so that you can then go about the rest of your life investing in yourself.